great future. We're talking real money.
Hi, this is Tom Cock. I'm entitling this podcast Postcards from the Edge. Many of you may remember the semi-autobiographical book by Carrie Fisher that was turned into, I think, a more famous movie. I always loved it. I just appreciated the honesty of all of it and about her life and trials and tribulations and et cetera, et cetera. And this is, a lot of you were thinking about the Edge here the last week. And just so we point this out, because we have to time, date, stamp these things because everything is changing so rapidly. This was recorded on Wednesday, the 25th of March. Okay, so if everything changes and we're all back at work and you're able to go to your favorite restaurant or bar by the time you hear this, please ignore everything. But for everybody else, and I don't think things are going to change that much in the next day and a half or so, this truly is Postcards from the Edge, because the edge has looked very close, right? The market has gone, always need to talk past tense, down a lot, almost by a third here as of today, even though we had a substantial rise yesterday. I thought I would share a few stories with you of people, real people that I talked to. I'm right on the front line of all this because people are calling me and our clients are calling us and you're calling us about kind of what do I do? And there's some other anecdotal evidence I'll share that suggests people are really, really selling and making bad decisions. So I just talked to someone recently whose $2 million had gone to $1.5 million in a short period of time, and they're saying, what do I do now? Another person who had just retired and invested their nest egg and watched it go down by about 20% in a matter of weeks. I acknowledge the pain of all that. I acknowledge that when you throw in the healthcare issue around all of this, this is a difficult, strange, and scary time. No question. Absolutely no question. And I'm not here to tell you here it's going to turn around in the next few weeks or years. I know as little about that as you do. And so when you call me and ask me, I'm going to say, you got to figure out how to tune that out. But you're not. I'll give you another example. We were just in the process of moving a 401k out of a plan into an IRA recently, and we called the plan administrator to do this. And we were told that there was a 2.5-hour wait, not because people were moving money from the plan to IRAs, but because they were making transfers in their accounts. I can guarantee you that people were selling stock mutual funds and buying bond funds, or in this case, the stable value fund, because that's what people do after the market goes down. Now, we have really worked hard with our clients. I think out of all of our clients, about 2% have actually sold to cash, a very small number. In fact, one of them asked the other day, and I said, you're the unusual here. We really try to get people to stay the course. And what we tell them, of course, is that if you look at after bear markets, the 1, 3, and 5-year returns for stocks are really great. You've made a lot of money by hanging in there. So history is on your side. But more importantly, stock market downturns are part of the plan. This is something we expect. You have built a portfolio, you should have, that acknowledges the fact that stocks move up and down, that acknowledges how much volatility you can take, and also acknowledges how soon till you need the money. If you're a young person listening to this podcast and you're putting money in your 401k every 2 weeks, you should be thanking your lucky stars. You're buying more shares at a lower price. You should not be writing one of those postcards from the edge. But what do I tell you to help you feel better? Well, here's one. And I just talked to my brother the other day. He's an educator. He's now trying to teach music from home. Imagine the challenge of all of that. Trying to educate people how to sing better through your Zoom meeting. Can't imagine. His campus shut down. Kids at home. This is a very odd time. And he basically called me and said, well, I guess retirement's off the table. How's your basement looking? And my basement looks good. He has to share it with a large screen television and the dog. But other than that, it looks phenomenal. So what do I tell him? Well, first of all, I told him, don't look. And I know that sounds odd because we manage about 800 families' money, so we're looking at it every day. And we've been selling bonds and buying stocks, bit counterintuitive in this time. But you really shouldn't be looking at your account balance every day, every week. And I think I've shared this with people. I put mine into a spreadsheet every 6 months. I am not looking at what this means to my retirement on a day-by-day basis, and you should not either. That will cause you to do things to your money that you won't like in the long term. Number 2, keep some perspective. If you're in a portfolio that is 60% stocks, 40% bonds, you're down about 20%. That's okay. That's to be expected. Remember, stocks have rewarded you for bearing the uncertainty of how companies' futures look. I just took a glance today, by the way, Boeing that was down to 95, trading at 170. Wow, there's a turnaround. Don't know where it's headed, but you've been paid to bear that uncertainty, right? Right. And here's the other part. You can't avoid the the numbers every day. They're everywhere. The market's doing this. The market's doing that. I swear they're on the side of buildings now, or they're flying them overhead. You cannot miss it. But here's what you can avoid. You don't have to read anything other than the headlines. You don't have to read the stories about this is the worst since 2008 and those prognosticators that are going to tell you, aha, here, it's time to buy gold. Aha, you need a guaranteed investment of some kind. That's when the real trouble starts. So don't write one of those postcards from the edge. Don't look at your balance every day. Keep some perspective and tune out the financial media. I can make one guarantee, and that is your life will most certainly be better if you can do that. And the likelihood is your financial life will be better as well. I'm Tom Kahn.
Talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.